All righty. First and foremost, truly appreciate you guys for coming and take some time out of your night to come listen. Today, we're just going to talk about some quick stocks to watch for this upcoming week, do a little bit of analysis, and if you guys have any stocks you have in mind, feel free to share it with the group. Maybe answer a little bit of questions towards the end of the session, planning for about 30 to 40 minutes. All right, so first and foremost, SPY. All right, so what happened overnight? We had a nice little gap, not really necessarily a gap up yet in the futures, but we had a big drive in the first 10 minutes. And that's partly probably due to the Chinese news that came out over the weekend with the president, basically getting his third term. So that is a catalyst for the market. The market responded pretty decently in the first 10 minutes. Now we are coming right back to that initial breakout zone. So we are pretty key area right now. We either hold here or just in this generalized region, and then we find new support and continue higher, or we continue back lower, probably to this area. Remember, it's only 10 p.m. Eastern, so the market, the overnight session really hasn't picked up just yet. We start to pick up with a decent bit of volume between about 2, 3, and 4 o'clock in the morning when other markets are open. So we are still very early, so don't sweat it. But currently on SPY, we are showing a daily bullish divergence. We also are squeezing on the daily. And if you look on the actual SPY chart, you can kind of see that we have a little bit of a daily inverse head and shoulders. So drive down there, head right there. So we would preferably like to hold the top of this little breakout. So anywhere from like 368 to 372. Bulls would prefer to hold about 372 to 370 though. Under 370, that psychological whole number, we can easily go down to 368. And then there is a demand zone right here. So a 10-hour demand zone between 366 and 362. There's going to be a lot of volume this upcoming week. If you didn't know, this week is probably going to be a complete make or break it for the stock market at the moment for the rest of the year, or at least most of November, because we have some very heavy hitters. We have UPS, we have MMM, we have Microsoft, Google, Visa, Spotify, Facebook, Shopify, Amazon, Intel, Exxon, Chevron. Like, we have some really heavy ones this upcoming week. We also have tons of economic news. We have PMI numbers, we have GDP numbers, we have unemployment numbers. So honestly, this is going to be a very volatile week. So if you are, how do I put it? If you are a newer trader, I would recommend honestly maybe sizing down a little bit this week. So let's say you normally play 5 contracts. I would recommend maybe playing 3 because there's going to be a lot of whipsaw action, lots of volatility, especially till probably about Wednesday or Thursday, because Thursday is going to be make or break it for the market. We have GDP numbers at 8:30 in the morning. We also have Apple, Amazon reporting, which are they are the biggest in the entire ETF, SPY and QQQ. So Thursday, a lot of investors are going to be waiting patiently for. So then Friday is going to be really fun, especially for 0DTE. Kind of a side note for 0DTE on this Friday. After lunchtime, don't trade 0DTE. You will blow your account. I promise you. Switch into the next week's expiration. But anyway, so that's SPY in a nutshell. We are squeezing on a daily time frame. We have a good bit of volume coming through on Friday. We very well might end up kind of gapping up overnight, maybe to 375, maybe up here. And then we either continue forward towards maybe Monday, Tuesday, Wednesday, or we have a little bit of a retracement back down to this initial breakout zone. So we would get the retest. I really would love to see the retest in the ideal situation, because we can play the both sides. We can play the down, and then we can play it right back up. So that's the ideal situation, because once we start getting more and more extended without really much of a pullback, the probability is not really much in our favor, right? So we actually want a retracement, because the stocks don't just go all the way up, the stocks don't just go all the way down. There's always some sort of a pullback, and I'd love to see 373 area become the pullback, or at least 372. But who knows? Anything can happen overnight. That is SPY. Next one would be QQQ. Kind of the exact same thing. We are having a daily time frame bullish divergence. We are squeezing on the daily. We are also forming this nice little head and shoulders, inverse head and shoulders. Preferably the bulls would like to see this 274 become the support. We also have this big old gap up to fill. So if we do hold here, our first major target is this gap to fill. The bears, if you're bearish, you want 272 to collapse. And then if we go to 272, then we go to 270. So a couple different possible scenarios that could happen throughout this week. Price action continues to 280. Then we retrace back to the initial impulse zone. We find support, and then we continue back upwards to maybe 280, 285 again. That's scenario one. Scenario two is we actually reject pretty much right here at like 277, 275, like we reject right here. And then we come all the way back down to the initial impulse somewhere over here, like 272, 2003. This is a big area of liquidity where participants are willing to step up and then possibly bounce to the gap fill. Or a third scenario is we just reject and completely come all the way back down to like 270, maybe 266, because there's a lot of liquidity sitting here. This is a demand zone, two different demand zones. I don't know if we're going to get down here at all. I doubt it. I mean, maybe not this week, but it's a very possible, that we do get down there maybe next month. But anyway, that's another thing that we want to talk about is we have the midterms coming up in November. So that usually also brings added volatility into the market. It could be bullish, it could be bearish. It really honestly depends. But sometimes historically, when we do have midterms and an earnings cycle like we are in right now, as long as the earnings are decent, we could see a possible bullish rally. And if that's the case, I would say, I mean, it's hard to say where exactly we could end up, but probably the first major target would be like 285 for QQQ. But anyway, that's QQQ. A couple other ones that I was checking into. The one that I actually really like is oil this week. So Oxy. So if you look here on the 2-month time frame, 1 sec. Okay, so this is a bullish 2-month dragonfly doji. That is a very bullish sign. So as long as we're able to hold preferably about 68 to 69, ideally 70, but as long as we hold around this, then we're fine. And we can break back up. We could have a continuation, and we could push to about 73 to 75. And then we have a top side of about 77. So the one thing that I do want to address is if you look at the 3-month time frame, you can kind of see throughout history, back since 2014, we have been rejecting this top trend line multiple times. So we really need to see some volume pickup here. Otherwise, we can come right back down to, I'd say, somewhere here, right? Somewhere in that generalized region. Either way, you can get an opportunity to the upside or to the downside. but I would just be careful and, you know, be mindful that we do indeed have volume, because oil is 100% definitely an open breakout strategy. You know, like oil primarily moves in the morning, so we just need to see a lot of volume in the morning and then the pre-market, right? So that's important. Someone asked me about XLE. Yeah, that's the energy sector. Energy sector does look pretty good as well, because we did just break over this big ol' resistance, and resistance turns support, turn resistance. Now we are possibly turning into a support again. So as long as we hold this $85 region, we're good to go. We are coming to this gap fill. So something that could happen is we fill this gap right there, and then we come right back down to here, and we retest that initial breakout area somewhere here. And as long as we hold that, that's awesome. Then we can continue back up to here around 90 bucks. All right. Yeah. Oil has been on watch for a while, especially since we have Chevron, and we also have, who else we have? We have Chevron, we have Exxon, and we also have Shell reporting this week on Thursdays and Friday. So that's something to be aware of. Now, I'm actually not interested in trading Exxon or Chevron currently this week, because they do report on Friday. The IV is just going to be inflated due to earnings. The contracts are going to be more expensive. Not really my cup of tea. So instead, that's another reason why I like Oxy. Oxy doesn't have earnings. It is oil, so we can play as a sympathy play. Now, one thing to be aware of, if we do reject here, we're pretty much forming a daily double top at that point. So just kind of be aware of that. We are forming a daily double top if it gets rejected here, but we really want to see some volume pick up somewhere up here. But I would recommend trading either Oxy. SLB had earnings last week, so SLB would be another continuation play. So definitely been on a massive rampage, and we haven't really been in these levels for a while. So as long as we hold, preferably like 49, 50 bucks, we can continue upwards. And then another one would be Shell is reporting on Thursday. So I wouldn't really touch this one until Friday after the report and the IV goes back to normal. But I would rather trade Exxon and Chevron next week after the earnings have reported and the IV goes back to normal. So that's the oil stock. Now another thing that it's very important, there is major earnings this week. So if you look here, these are pretty much one of the major earnings this week. Not Apple, Amazon, Meta, Google, Microsoft Shop, Ford, Exxon, Chevron. So like these are some pretty major hitters. But the thing is, I'm not interested in trading any single one of these until they report. Why? Because the premiums are going to be jacked to shit up, and I'm not trading that. I'd rather play the sympathy plays, right? I'd rather play the sympathy plays. So a couple different sympathy plays I have in mind are the names that have already reported. So these are the ones from last week that reported that were pretty decent. So the ones that kind of catch my eye are Netflix or Tesla. Snapchat's like SLB, yes, but I'd prefer Oxy or Shell. But anyway, so because the reason I'm trading these, the IV is already back to normal, and you're still able to get sympathy plays off of this. So usually post earnings moves have a very high chance of success for about 1 to 3 day minimum of momentum continuation after the market agrees on price. That's important. That is important, right? So because, for example, Snapchat. So what the reason I said after it agrees on price. So if you look here on Snapchat, the last earnings, it didn't really do shit for like 5 days, but once it agreed on price, then it had the continuation. So that's something to be important of. We want to see agreements and then usually we see some sort of a continuation. So Netflix is at a very key area. We are coming into Corona low numbers right here. So those are Corona low numbers. We need to break out of it. If we break out at 290, then we see 297, $300. So Netflix I'm liking for sure. What else do I like? Tesla. So like if you're not able to afford Netflix, that's cool. No worries. Tesla is a little bit cheaper. It's on a monthly squeeze. Now, one thing to understand though, we are forming a possible monthly head and shoulders, which is bearish. But obviously that would take weeks and weeks to form. But you know, it's just something to think about. We do have a gap up. So we do have a big gap up to fill. So we have a gap up, we have a gap up right there. So that is just something to think about, and a gap right there. So bulls really would love to push out here, because if we can break past like 215, we can see all the way up to about 220, 225. Now, if we retrace, all the bulls really care about holding is $200. If we can hold $200, we're good to go. If we cannot hold $200, we are going back down to 190. But anyway, going back to the earnings names, like the post earnings names, I would rather be trading names such as like Netflix and Tesla until these big boys, until these big boys really report. But the thing that you want to know is these names are reporting next week. So their IV hasn't really juiced up just yet. So we're able to also trade names like AMD, Coinbase, mRNA, Twilio, preferably in my case would be like AMD and Coin. mRNA is a little bit expensive. So if you don't really have the account size for it, just don't worry about it. But AMD, no brainer, usually really awesome. Coinbase can move for shit. But that's just kind of my stipulation. Don't trade the major earnings names until they report. Just find some sort of sympathy play inside that respected sector, and you're able to play off that. Now, another thing about AMD, just before I forget about it, if you look here, AMD is actually in a big weekly support area. So if you look in that generalized region, we've been inside this weekly support for about 2 weeks now. So we really need to hold this like $54, $55 region. If we hold this region, we don't really have much upside. We don't have much resistance until pretty much this weekly 300-day exponential moving average, so about like 62.50. But if we do break below this, then we don't really have much until like $50. So we can get a good trade either way. Yeah, that's all I was really looking at so far this week. I care about every single one of these, but I don't care about any of them until they report. I prefer to trade the earnings report names, because when earnings season comes around, as it is right now, this is when you want to dust off your earnings book, playbook, simply because you're able to get these nasty momentum moves that can last for couples of days. So you can just keep, double dipping and triple dipping on the exact same stock. Example, ROKU. When ROKU had earnings last time, a couple months ago, let me go check it out real quick. Where the heck is it? It was pretty much just bullish as poop for days. 1, 2, 3, 4 days. This is what I mean. Post earnings names, you can just double, triple, and quadruple dip, and just keep playing it over and over and over until there's no longer any edge. This is why, especially during earnings seasons, you want to be more mindful of things that are reporting, things that have already reported, and things that are reporting next week. Super important. Someone wants me to check out BIDU, I'm sure. I'm not really familiar with this one, but let's check it out. So we are in a big monthly support region. We need bulls to step up somewhere in this generalized area, anywhere from $90 to $80. If they do not, we come all the way back down here in this monthly demand zone right there of 270. So basically about $70 we would come to if we break under 80. If we hold, then let me see the more upside. Let me see here. So if we end up holding, then we see 93, about 97, $100, that psychological whole number. All right, so just some information. Now, that's actually another thing that you brought up, Chinese stocks. That is good. I'm going to actually add that to my watch list. BIDU, BABA, JD, because of that Chinese news that we've had over the weekend. Chinese stocks could possibly see some sort of movement this week. So thank you for bringing that to my attention. Almost forgot about that. One sec, let me rechat. By the way, if you have any questions or want me to check out some stocks, we can do that for like 15 minutes or so, and I'm gonna pop off. So whatever you got, shoot them to me. Let me read the chat real quick. So could we start a $65 call in AMD 2 to 4 weeks out if it holds the support line by around this Thursday or Friday? Honestly, you could even buy like earlier in the week. As long as it's holding that $55 region, you can purchase calls. Now, one thing to understand, you do not, I repeat, you do not want to hold into earnings. You do not swing into earnings. You do want to buy 2 to 4 weeks of expiration, but you after Monday, you don't swing. So like this next Monday, you're cutting. Ideally, if anything, you might feel better maybe entering the position like Monday or Tuesday, however we start looking, as long as the play is there, maybe like Monday or Tuesday. And then maybe just holding until like Friday or that next Monday and then just cutting it, because that's all you're looking for. You're looking for the pre-earnings run up. You're not looking to swing into it. Swinging into earnings is a legitimate gamble. That is another thing I want to mention. If you swing into any of these earnings, you're literally a degenerate. Period. You're a degenerate. Anyway, if you want to lose money, go for it. But regardless, hope that helps. What is normal IV? That is a very, very broad question. One stock might have 40% normality. One stock might have 100% normality. So there is no just baseline normal IV. It's completely different for everything. But something to understand, during earnings events, such as where we're at this week, whatever the normal IV is always going to be increased. Therefore, when it is increased in that mannerism, you will always pay more money for your contract. So kind of a prime example, before Amazon split last year, on average, the contracts were about $2,000. With earnings, because of the implied volatility increasing, those same contracts were about $4,000. Therefore, not in your best interest to play any of these names until they report, because you're just going to pay a jacked up price, and usually the contracts don't really move that much. Now, I'm not saying these names won't move, but your contracts won't really pay you that well because you're IV and you're just not really paying a good deal. But regardless, hope that helps. Bull or bear? Whoever has been in my sessions know that I don't like that answer. We can be bullish, we can be bearish, don't know. I'm not looking at any of the Amazon names. I'm not looking at any of these. So please don't ask me. I don't care what the hell they're doing until they report. As I said, I care about them, but not until Wednesday, Thursday, and Friday. So my analysis I'm going to give you right now is going to be completely different from Wednesday. So therefore, just kind of mute. Walmart is something I will check out because of Costco. Costco reports this upcoming week, I believe. So that could be, Walmart could be never mind. Which one is it? It's I know one of them do. UPS, I guess I could consider. Not sure. But I know Walmart usually is decent when they do break out. So Walmart's been in this very, very tight consolidation for a bit. So as long as we break out of this tiny little flag we're in right there, we can push to about 143. So probably 140 and then 143. Now, another thing about Walmart is Walmart is a swing stock. I do not want to day trade Walmart whatsoever. So if you are interested in it, it's very cheap, but I would recommend probably buying like 2, 4, maybe even 6 weeks of expiration in order to possibly catch an upside move. And then your stop loss would probably be like under 134, 135. Do I use the VWAP daily? Yes, VWAP is one of my favorite indicators. Absolutely. um, um, Snapchat $11 call is down 98%. Is there a chance it may reverse? I wouldn't bank on that, but I mean, since your contracts are already down 98%, really doesn't matter. Just hold on to it until like Wednesday, and maybe you're able to get a little bit back, but I highly doubt you're going to get the full contract back. So the Chinese news is the president got reelected for the 3rd term, and that's going to send some. So pretty much what happened, he secured a historic 3rd term leadership, and that's pretty unheard of, right? So he is a, how do I put it? It's going to either send one or two things to the market. It's either going to be a long-term economic consequence, and the market's not going to like that, or the market will immediately rally and they will like that news. So you're not really going to know until this week, maybe next week. But even though it's an Asian market, it's still going to affect our United States market. So it's something we do care about. But yeah, indicators I use the 50-day exponential, 200, 300, 34, VWAP, point of control, and I also use a volume profile, which looks kind of like this. So I don't really use too many indicators. And I also use a buy and sell. So before people ask me, it's called buy, sell, volume totals. Hope that helps. Do you buy contracts that are further expiration or more contracts in the money with shorter time frame? I'm not too sure I understand your question. Hold on, let me reread it. Do you buy more contracts that are further expiration, okay, or more contracts in the money with shorter? Okay, I think what you mean, correct me if I'm wrong, but I believe what you mean is, do I buy more contracts with further expiration, or not further expiration, further strike out, so like further out of the money, or do I buy in the money with less expiration? So that's a good question. It really depends on what you're attempting to do. If you're attempting to swing something, it's perfectly okay to go a little bit further out of the money. Now, general rule of thumb is your delta wants to stay above 0.30. So that's something you want to write down if you're a swing trader. Ideally, the contracts you are looking for is above 0.30. If you see something underneath, you're pretty much swinging too far out. That's simple as that. Now, for day trading purposes, you do not want to go out of the money that much. You want to stay pretty much at the money, in the money, or maybe one strike out. But you don't really want to be a couple strikes out. It's just not in your best interest. It doesn't really hit that often. But yeah. When you enter a trade, you wait 15 minutes or 5-minute close above the level of interest before taking the trade. Do you cut if it closes below the level, or do you cut a certain specific certain percentage? Yeah, that's a great question. So I don't ever wait 15 minutes. I feel like that's a little bit. Now, let me take a step back. I'm more of a scalper, so 15 minutes is kind of a long time for me because I could definitely miss the initial impulse. Now, if you're a day trader, 15 minutes is fine. I would probably recommend more of a 5 minute, simply because you don't miss that big of a chunk, but you still get good confirmation. Now, I actually would prefer the retest, if anything. So let's just pretend, just do like a kind of a simulated trade. So let's just say here's the breakout, possible, level of interest area where I'm thinking about buying calls. So let's say here's the 5 minute hold, right? There's the 5 minute hold. We're still holding. And possibly I would enter this, but more times than not, I would actually wait specifically to see something kind of come back down, right? Because if we come back down and we hold, that's the retest. And that is actually when I would become interested, because the historical probability of the retest being more significant is very high. So like the first initial impulse, usually you can get faked out on, or it just doesn't move that much. Because if you think about it, there's going to be overhead liquidity sitting here, right? You're basically buying a breakout into overhead liquidity. So that's another reason why breakouts don't normally work that much, but it's much better for you risk to reward rise just to wait until that retest, because if it holds, awesome, you just got a great entry. And if it's wrong, not really that big of a deal, because you already know your stop loss is underneath that right there, right? Maybe give yourself like 50 cents, 25 cents so you don't get pinged out. But I prefer the retest trades over the breakout trades. Now, something else to understand, it depends on what you're trading, right? Because if you're trading oil or maybe growth names or like meme stock names, something like that, you don't really want to do that mentality, because sometimes you don't get the luxury of a pullback. It just keeps going because most of those names are breakout names and they're momentum based names, right? So it's not really in your best interest to do that mentality. You would rather have the initial breakout. Whereas other stuff, maybe like, say indexes, possibly, it's easier and better just to wait for a retest, because the market makers are looking for that leftover liquidity. It's basically becoming a magnet. So they drag the price back down to get the liquidity. If it holds, awesome. So it really, really depends on what you're trading, because you don't want to have a cookie cutter. How do I put it? You don't want to be using the exact same strategy for everything. Just because it works for indexes or maybe tech doesn't mean it's going to work for oil, meme stocks, growth stocks, post earnings names. So you kind of have to do different things for different instruments. I hope that one helps. Hold on, I'm just reading. Hi, Burn. SPY and QQQ, I've already done both of those. I recorded it. So if you want to check out that recording, I'll post it after our session, but I've already did both SPY and QQQ. So what is point of control? Yeah, that's a good question. So one sec, let's talk about that real quick. Oops. Which random stock? There we go. Nah, never mind. That's better. What the heck am I doing? That's what I wanted to do. Okay, sorry about that. Anyway, so we'll do one that's already happened. So if you see here, there is the volume area high, volume area low, and the point of control. So within this high and low, throughout the entire day, as you can kind of see, there's more candles up here, little volume plots up here and a little bit down there. But throughout the entire day, the most amount of volume happened within this. So 68% of the volume happened between here and here. And then the most amount of volume, so basically the highest concentration of volume happened at this point of control. So the point of control is pretty much just saying, hey, I'm a very, very key level. I'm either going to reject or I'm going to bounce here, or, whatever the case. But it's basically just saying where the most amount of participants are willing to step up throughout that specific day. So if you look here on this day, here's where the most amount of volume was within this 68%. And here's one of the most concentrated areas. Same thing here, highest amount of volume, concentrated area. So volume area, high node, low node, point of control. But yeah, now another thing, just kind of a side note, I wouldn't recommend utilizing the same day volume profile analysis because it changes very often. Like this point of control can be here, but in 10 minutes, it could be down here, right? It changes very often throughout the day because it's constantly refreshing itself. So I would recommend actually using the prior day's information, such as, okay, here's a value area high. So that could act as a possible resistance. Okay, here's a point of control. In this case, since the price action is above it, this could act like a possible support. Okay, or okay, here's the point of control from the day prior. Then that, okay, that could be another support. Or maybe if I go back in time, well, it's not back down here, but you get the point, right? So that would be another resistance. So you can use these volume profiles to your advantage and know where the amount of liquidity is sitting, the amount of volume is sitting. What software is this? This is TradingView. If we're holding XM contracts, do you believe we should cut before earnings? Yes, 100%. What is this indicator called on TradingView? Yeah, I gotcha. It's called SVP. And that's what it looks like over there. I'll check out like 2 more things. I'm probably going to pop off. So Neo, gotcha. Well, I'm already liking that little bull flag in the close. That's nice. And with the Chinese news over this weekend, we could see a rally and continuation in most Chinese names. That includes BABA. So yeah, I would recommend just kind of keeping Chinese names on watch this week, because usually when you get severe Chinese names, Chinese news like we did over the weekend, we're going to see some sort of move either to the upside or to the downside. We won't really know until pre-market. We're going to get more information during pre-market if there's a gap up, gap down, etc. But Chinese names, one way or another, will rally and or will drop this week on that news. So, just some information to check into, because most Chinese names are pretty cheap to trade. Bob is pretty cheap. JD is pretty cheap. BIDU is pretty cheap. And Neo is pretty cheap. Right. So, and then if anyone wants to check out my watch list, here it is again. I'm not trading any of these names until after earnings. I'm going to focus more on these names because they've already reported or they report next week. And I'll probably just trade a lot of index as well. Kind of curious, did we hold that 400 handle? Yes, we actually held that $400 handle, a psychological number. So as long as we hold this 400, we can bounce back up. If we don't, like we said in the beginning of our session, we come back down. All right, any more questions? Anything else we have here? I hope you guys learned some cool stuff. You got some good stocks to watch. Do you post recordings? Yeah, I post my recordings every every video I post. So by the way, if you're not familiar, I post in-depth newsletters every Sunday. I go in depth with analysis. I go into stocks to watch. I do market news. I do economic news. So if you're ever curious about that, just let me know. And I'd really appreciate that. Also, I had a couple requests last week. So I was on the fence about it, but a couple people asked me if I was doing a session again, kind of a group session. I decided to do it. Most likely we'll do it either this week and or after Halloween, just so people can get some family time. But I was thinking kind of just maybe like a 10-hour session, 2 weeks duration. And this way we can kind of talk more in depth, because what people were asking was they really like the way I review my trades and just reviewing trades. So they thought that would be a good idea to have a session, kind of a group session where we all discuss trades, discuss thought processes, kind of bounce ideas off of each other, just be able to, ask questions more in depth and all that fun jazz. So if that sounds pretty curious to you, and if it sounds, interesting, feel free to message me on either Discord or Telegram, and we shall talk about it. I'm probably going to keep the class really small, so it's definitely going to be a first come, first served basis, just so I'm able to kind of cater to everyone in a more in-depth personal manner. So it's not going to be a large group whatsoever, and it's going to start either this week and or next week. So spots will probably fill pretty quick. If you're curious, if you want to chat about it, I'd love to talk to you more, and I hope everyone has a fantastic rest of your night. Thank you guys again for joining. I'll post some more of a I'll post more of stocks to watch in the morning during my pre-market analysis. But thank you again, guys. Hope you have a fantastic rest of your night. Give your kiddos and your family some kisses and hugs for me. Toodaloo. Here's my information. If you want to contact me, I'll post it in the chat, my Telegram, Discord, and YouTube if you want to talk. If you want to do trade reviews, whatever you want, always happy to help a fellow trader. Love you guys. See you guys tomorrow. Buckle up. It's going to be a fantastic week. Super volatile. How much knowledge do we need for this upcoming class? Not that much, because I plan on teaching some cool stuff and some awesome tips and tricks. So even if you're a beginner, even if you're more intermediate, whatever the case, it's going to be valuable for you. So let's talk about it. See you guys later. Good night. Appreciate everyone for joining. Good night.